in the back of your freezer, all the way to the back, there's things we don't want to see. We prefer not to ask or check what's there. And that is exactly where the Build Back Better $2 trillion legislation is currently at. Senator Joe Manchin put that mother lover on ice. It's pretty much as good as Shia LaBeouf's career. And in this video, I'll explain what it means for the economy, what it means for the stock market, short term, long term, what it means for inflation, and most of all, how I think this just improved my setup for 2022 insanely. I'm going to make a lot of money from this play. I'll explain in a second why and how. Don't worry, nothing comes behind the paywall. Everything is free on this channel. So let me just explain to you what happened. For the past few months, Biden and crew were pretty much, dating Joe Manchin. He was giving him flowers and chocolates, trying to convince him to sign off. And then in the last second, on the third date, Joe Manchin put Biden in the friend zone. Yes, he friend zoned Biden right on the cusp of that third date. And what I think is funny is actually their names. Manchin Joe and Sleepy Joe. They could be like the new Cheech and Chong. They could be munching and sleeping. Just my crazy mind. In any case, this bill dying essentially means that the stock market is going to have a hissy fit. When you take video games from teenagers, they don't appreciate it, they don't like it, and they throw a tantrum, which is exactly what's about to happen. Now, this plan, this $2 trillion, we're supposed to be one more shape of the money printer. There's a few ways to put money in the system. This was one of them. This $2 trillion, which we'll be taking away from the market right now, is essentially like taking a video game from a kid. The kid ain't gonna like it, and you're about to have a few rough hours, but long term, it's probably healthy for the kid, which is exactly what I think is happening here. This bloated $2 trillion plan would have had a very negative impact on inflation. These guys have just been handed down a gift. This is the best thing that could have happened to the Fed, getting $2 trillion less off the table. Woohoo! The problem is that I think their happiness is going to be a little bit premature because this doesn't solve the problem. That's like giving an aspirin to somebody with a really bad disease. It's going to lower the fever, but you still have to address the main problem. So we would still need a much hawkish Fed to solve the problem. They cannot just leave festering around. It's not like it solves the problem. It creates an illusion of a solution, which is really good for us. Let me explain. And even though the economy is going to suffer in 2022, obviously we're going to have COVID still hanging around and it seems not going anywhere anytime soon. But the Fed and the government won't have the same means of helping out the market like they did in 2020. The inflation is way too high for them to ever try to do that again. So it's going to be very tough. However, if you think that this completely resolves the conundrum of the Fed, when to announce that they lied to you again about having to raise interest higher than they already said, well, not exactly. First of all, they still have to do it because inflation is just too crazy. It might buy them a little bit more time. It might not happen in March when they actually start the first rate hikes, but they don't have a lot of time because by mid next year, if they don't do something about it, inflation is going to go ballistic. They have to do it. Now, here's the thing. The Fed already played you once with the whole transitory bullshit. Now, they're cosplaying this whole hawkish approach, trying to get you again. And as George Bush said, fool me once, shame on you. Fool me twice, I think I can't be fooled again. I don't know what he said. Who cares? The problem is that we've seen this happen before. And look at this. High inflation, low bond yields. How can this be? It's kind of logical, and yet they're consistently low, currently at 1.4. That is because smart money isn't buying the Fed's lie. They're staying at high demand on bonds. Now, how does this improve the setup I have for 2022 and how we can make money from this? Check this out. So, looking at the bond market, we know one thing. Nobody has priced in yet higher interest rates. Essentially, the bonds are trading as if we're not going to have elevated interest beyond what the Fed has already announced. They're not buying the bullshit. They're not buying the lie, which is good for us because essentially that means that the fall is going to be much higher when the Fed eventually has to admit that they've made a mistake. It's just a question of time, not if. They will have to do it because the inflation is going to be way too insane. So when they actually announce it, the fall from grace is going to be much bigger now with this new setup. So with the market completely not pricing interest hikes, how can we make money? Well, there's two things I'm doing, at least personally for myself. And don't take this as financial advice. I'm not a financial advisor, just a guy on the internet with an opinion, which might be inaccurate, might be wrong, might be the ramblings of a madman. Do your own research, make your own decisions. But this is how I'm playing this. I'll be waiting for the Fed to pull the same stunt they just did with transitory, saying they're retiring the word. I'm going to waiting until March, April, May, when the Fed comes out and says, well, we were wrong about interest rates. They need to be much higher than we anticipated. We're retiring the previous rates. Now, that is going to send the stock market down, at least growth stocks, and then I'll be picking up all the growth stocks for cheaper. So I'm not buying any growth right now. What I am buying in the meanwhile is all the inflation-proof stocks I can find. And in that respect, there's a whole set of parameters you have to look at to find out if a stock is inflation-proof or not, such as how sticky are the clients, how much pricing power they have, how much capex they actually have to spend to ramp up, how much cash flow they have, all of these parameters. In fact, I've made a whole video detailing how to find inflation-proof stocks. I'm going to put it right here for you to watch. Also, on our Patreon page, we're finishing up a project of 30 stocks which are inflation-proof. We're already at the 10th right now. We're going to finish the other 20 by the end of this month, which means in the next 10 days. Check it out. The link will be below. It's $5 per month if you join. Thank you so much, and we'll see you tomorrow.